Donald Trump's return to the White House has sparked intense debate across all sectors of the American economy, and the energy industry is no exception. With the global push towards renewable energy sources, the stakes have never been higher. Trump's first term was marked by a decisive shift towards fossil fuels and a scaling back of environmental regulations. This approach was met with both praise and criticism, as it aimed to boost domestic energy production while raising concerns about environmental impacts. The question on everyone's mind is whether a second Trump administration would signal a boom for the energy market or usher in an era of uncertainty. Industry leaders and environmentalists alike are speculating on the potential outcomes. Would we see a repeat of his previous policies, or would a new term bring about a different approach? The energy landscape has evolved significantly since his last term, with advancements in technology and a stronger emphasis on sustainability. The answer, as with most things related to Trump, is far from straightforward. His unpredictable nature and shifting priorities make it difficult to forecast the exact trajectory of his energy policies. However, examining his past actions and stated priorities can offer valuable clues about the future direction of American energy. By looking at his previous decisions and the current state of the energy market, we can begin to piece together a picture of what might lie ahead. During his presidency, Trump made no secret of his desire to unleash what he called American energy dominance. He often spoke about the need for the United States to become energy independent, reducing its reliance on foreign oil and gas. This vision was a cornerstone of his economic policy, aiming to create jobs and stimulate growth in the energy sector. His strategy centered on boosting fossil fuel production, particularly oil and gas, while reducing reliance on foreign energy sources. Trump believed that by tapping into America's vast natural resources, the country could achieve unprecedented levels of energy security and economic prosperity. Key to this approach was the rollback of regulations that the Trump administration viewed as burdensome to the energy industry. These regulations, according to Trump, stifled innovation and growth, and their removal was seen as essential to unleashing the full potential of American energy. This included loosening restrictions on methane emissions, easing permitting processes for pipelines, and opening up more federal lands and waters for drilling. The administration argued that these measures would not only boost production, but also create thousands of jobs in the energy sector. Trump's stance on renewable energy was decidedly less enthusiastic. While he acknowledged the potential of renewables, he often emphasized the reliability and economic benefits of fossil fuels. His administration's policies reflected a clear preference for traditional energy sources over newer, greener alternatives. He repeatedly expressed skepticism about climate change and withdrew the United States from the Paris Climate Agreement. This move was highly controversial and sparked significant debate both domestically and internationally, with critics arguing it undermined global efforts to combat climate change. His administration also implemented tariffs on imported solar panels and sought to reduce subsidies for wind and solar power. These actions were seen as efforts to protect American manufacturing but were criticized for potentially slowing the growth of the renewable energy sector. Trump's return to office, his energy policies would likely resemble those of his first term, albeit potentially with some adjustments. His focus on American energy independence and his preference for fossil fuels over renewables would likely remain unchanged. This could translate into a renewed push for deregulation and incentives for oil and gas production. We might see a revival of efforts to expedite pipeline projects like Keystone XL and further expansion of drilling on federal lands and offshore. However, the global energy landscape has shifted considerably since Trump's departure from office. The rise of renewable energy sources, coupled with growing concerns about climate change, could temper some of his administration's more aggressive pro-fossil fuel stances. Trump's return will have far-reaching implications for various stakeholders in the energy sector. Oil and gas companies, particularly those operating domestically, could see significant gains from deregulation and increased access to resources. However, the renewable energy industry would likely face headwinds from reduced government support and a renewed emphasis on fossil fuels. This could slow the growth of solar and wind power and potentially lead to job losses in the sector. Consumers could experience a mixed bag of outcomes. While increased domestic oil production might initially lead to lower gasoline prices, it could also come at the expense of environmental protections and accelerate climate change, with potentially far-reaching consequences. Fossil fuels first. Unpacking the impact on oil and gas. A second Trump administration would likely be music to the ears of the oil and gas industry. The sector has historically thrived under policies that favor deregulation and tax cuts, which were hallmarks of Trump's first term. These policies not only boosted production but also significantly increased profits for many companies within the industry. Trump's previous policies, such as tax cuts and deregulation, were widely seen as beneficial to the sector, leading to increased production and profits. The reduction in regulatory hurdles allowed companies to expedite their projects, bringing oil and gas to market more quickly and efficiently. A return to these policies could incentivize further investment in domestic oil and gas exploration and production. Companies might feel more confident in exploring new territories and investing in advanced technologies to extract fossil fuels more effectively. Companies might be more willing to invest in infrastructure projects, such as pipelines, knowing they have the administration's support. This could lead to the creation of new jobs and stimulate economic growth in regions dependent on the oil and gas industry. However, the global shift towards cleaner energy sources could limit the long-term benefits for the industry. As countries around the world commit to reducing carbon emissions, the demand for fossil fuels may decline, putting pressure on traditional energy companies to adapt. Even with favorable policies, oil and gas companies might find it challenging to compete with increasingly affordable and sustainable alternatives. The future of the industry may depend on its ability to innovate and integrate renewable energy solutions into its business model, ensuring it remains relevant in a rapidly changing energy landscape. Renewable roller coaster. What would a Trump return mean for clean energy? The renewable energy sector, which experienced significant growth during the Biden administration, might face a rockier road under a second Trump presidency. Trump's previous skepticism of climate change and his support for fossil fuels suggest that renewable energy would not be a top priority. A reduction in government subsidies and incentives for renewable energy could slow down the industry's growth trajectory. The imposition of tariffs on imported solar panels could also increase costs and hinder the deployment of solar energy projects. However, the continued decline in the cost of renewable energy technologies and growing public support for clean energy might provide some buffer against adverse policy changes. The consumer conundrum: energy prices in the balance. The impact of a Trump return on energy prices for consumers is a complex issue with no easy answers. On the one hand, Trump's focus on domestic energy production could lead to lower gasoline prices in the short term. On the other hand, a rollback of environmental regulations could result in higher costs in the long run. These costs could come in the form of increased healthcare expenses due to air pollution or damage from climate change-related events. Ultimately, the impact on consumers would depend on the specific policies implemented by a Trump administration and how these policies interact with global energy markets and the broader economy. A greener future? Environmental impacts of a potential Trump return. Environmental groups have expressed significant concerns about the potential impact of a second Trump presidency on the environment. Trump's previous record of rolling back environmental regulations and withdrawing from the Paris Climate Agreement suggests that environmental protection might not be a top priority. A renewed emphasis on fossil fuel production could lead to increased greenhouse gas emissions, exacerbating climate change. Weakening environmental regulations could also result in poorer air and water quality, with adverse effects on public health. However, growing public awareness of climate change and the increasing affordability of renewable energy might limit the scope of any potential environmental rollbacks. Boom or bust: the uncertain future of energy under Trump. The potential return of Donald Trump to the White House injects a considerable degree of uncertainty into the future of American energy. While his past policies suggest a continuation of his pro-fossil fuel agenda, the evolving energy landscape and growing climate concerns could necessitate a more nuanced approach. Whether a second Trump administration would lead to an energy boom or a period of turbulence remains to be seen. The ultimate outcome will depend on a complex interplay of factors, including global market forces, technological advancements, and the political will to address climate change.